All right, what's our direction? Yesterday we were short because of the 15-minute and the 10,000 tick chart were underneath the moving averages. But we got to check the week chart and we got to check the day chart, daily biases and all that to see what's going on. What we have here, the high and low of last week. All right, we're in the range, we're in the middle. Okay, so until we break one of those, we're indecisive on the weekly. Here's the daily chart. What do we got for the daily chart? Let's take a look at the highs and the lows. You know, it was interesting too because I was watching this area where the low of the previous day, price was coming back up into that. It was very interesting to watch price do that right here on this in this area. But it just kept chopping around. It didn't really make its mind up what it wanted to do. So it was hard to kind of gauge that. So, but a lot of times the high and lows of the previous day are excellent for helping us understand, you know, which bias to have and go with the new daily high and low of the previous day, which is this candle here. And then we are sitting around the high of that now as we come into work today. So which direction? That is a good question. I really don't know just by looking at this because it is so flat. Let's go to the 4-hour chart. 4-hour chart and see what's going on here. Now, obviously, it's trending up, and we say, okay, the daily bias is up. Okay, great. I'm not going to argue with that. I'm just saying that I still don't really have 100% surety. I guess if I was looking at this chart, I would think up is greater chance than it coming down because it just came down, but it didn't sweep any of these pivots. It came down and created a higher low. Created a higher low and now it's heading back up, so the stronger bias would be for this to go back up probably. 4-hour chart there, an hour chart, see what we got here. Yeah, on this, you know, we were thinking that the 20 has finally crossed back up over the 50. Everything's over the 200. Everything's trending up here. That is probably going to be heading back up here. It looks more like up here on the hourly chart. Okay, so what do we have on our trading time charts, which is the 10,000 tick or the 15-minute. They're basically the same. What we have here is price is above all the moving averages, giving us a bullish bias to the upside. So that's the direction that we follow. We follow the direction of the 10,000 tick or the 15-minute. Okay, the 15-minute is very similar. It just looks smoother. Here we are. Price is not exactly in the best position above all the moving averages. In fact, it's taken a dip here. So I follow the 10,000 tick chart when things are not quite correlated between these two. And it may be that this is correcting and going to drop down below the 200. It may be. So that's partially why also I'm still very cautious on the direction. But it could sweep below, it could drop below, or it could go up, and it can go either way. So 15-minute chart for me is what I'm going to follow, and the 10,000 tick. And if price is above everything on all the time charts, 10,000, 5,000, 2,000, and 1,000, then I'm definitely looking for a long position. And right now it looks like that's what we have. Everything is above all the moving averages except for this. Now when it comes to the 1,000 tick chart, it's going to look bearish, and it might even look bearish on the 2,000 tick chart from time to time because we're waiting for a deeper pullback on the higher time charts. It can look like that. So it's best when they all agree, when everything's going up. But as we get more and more experience, we understand that the lower time charts, especially the 250, which is what this is actually, this is the 1,000 right here, looking bullish, right? Looking bullish. So sometimes it looks bearish though before we get a trend line break, and that's okay on the lower time charts because the higher ones are all agreeing. From the 10,000, you know, if you had the hour chart, if you had the 15-minute chart, here's the hour chart above all the moving averages. Here's the 30 looking good above all the moving averages. And we look at all the time charts all the way down to the 1 minute. If everything's generally going in a bullish direction, here's the 15-minute. Okay, so all those are basically saying it looks bullish. So I'm thinking bullish. Now I'm looking for trend line breaks to the upside, which is going to be something like this, right? No, that's the downside. That's right. We are now, that's what I was doing yesterday. I was shorting. So now we're looking for trend line breaks going in the other direction. So that's what we're going to do today. So far, the bias is bullish, mostly, and we'll be looking for long positions. All right, we had an interesting CPI report. Price went all over the place. Now it's heading back up in the bias that we were thinking, mostly up. Price shot up even higher over after a sharp dip down, but back up over the top. Now it's coming down, and this is when we start looking for, the trend line breaks. When it does do a pullback into a PD array, fair value gap, price structure, 50% retracement. So if we draw our Fibonacci on this line here, we go up here and we just kind of look for, an area of pullback and an interest. We're looking at hopefully somewhere in this area here where it can come back to these fair value gaps here around 50%, 60%. This is the 1000 tick chart, or the 1 minute chart is very comparable to that. Let's look at the 1 minute chart to see what we got. We don't want to miss anything here, but the 1 minute chart is very similar in that it's got the same kind of development of candles. It's just choppier looking. We've got the 50% pullback here on the 1 minute chart. Fair value gap right here on the 1 minute chart. We're just looking for confluences and different elements and variables to agree that we are getting ready for a serious trade setup. Hold the 5 minute fair value gap. There's one down here though on the 5 minute chart where the moving averages are. So I'm going to keep an eye on the 5 minute chart because that one looks the best as far as the clearest of ideas. 5 minute chart pullback, and here's the 15 chart. It's not quite clear, so we'll keep an eye on the 5 minute chart. So looking for a possible pullback here. It looks like it's heading up already though. Sometimes all we get is price structure and we don't really get the ability to get in when we want to get in. All right, we might be getting an area of interest here. It's pulled back about 50% of this big move down. Let's take a look at 50%. You can see that it's pushing back up here. 50% of this move right here. Yeah, right at the 50% mark. That doesn't mean it can't go down lower. 50% right here into this, into this fair value gap on the, that's what I've been waiting for. So, this is the time to do it. And I just don't want a big giant stop loss. If I can get in lower, I think this is worth a try right here. I really do. And even if it loses, with that big candle coming down right there, might be telling us it's not done going down. It came down kind of quick. Candle behavior is very important as well. And it did break the trend line, but it went right back up over the top. That's a 250. Let's go to the 1000 tick chart. It hasn't really broken the trend line yet. Now, there's several ways of playing this. Number one, I could just take it off the fair value gap or a price structure pivot level when it hits it, or I can wait until the trend line is broken. And a lot of times I prefer to wait for the trend line to be broken because trying to catch the bottom or the pinpoint accuracy it's good. It's a better price, but it's also higher risk. Higher risk in that it's not quite done going down yet. So we're waiting patiently. One of the hardest things to overcome is to wait for an A-plus trade, to get away from the video game mentality, the gambler mindset, and just treat it professional. That's what I'm trying to do. I'm trying to rationalize what makes this trade good, what makes it bad, looking for all the bad reasons to not take it, looking for all the good reasons to take it. I like that it's pulled back to 50% retracement. I like that it's at a fair value gap. Don't like that it has not broken the trend line yet. So waiting for a professional trade, waiting for an A-plus trade, that's hard for everyone to do who's just getting started on it. And in order to get professional and pay my bills, I cannot just take trades randomly. It has to meet certain criteria. And something we need to also realize is that, just because we have a certain piece of the puzzle doesn't mean it's going to automatically work. All fair value gaps do not work. All price structures do not work. All Fibonacci levels do not work. It may be going down to a deeper Fibonacci level. It may be going down to a deeper fair value gap. It may be, setting up for another leg down and then reverse. It may not reverse. We may see a completely a reversal day. So being aware of all the possible circumstances in the trade is what really helps us become more professional and not just trying to trade for the sake of trading. All right, I just drew in the high of yesterday, and this is the line right here. It's bouncing on the top of the high of yesterday. It's an interesting place. It looks like this would be a good area to buy. It really does. Okay, it's on the top of the 200 moving average. It's on top of yesterday's high. It's in a fair value gap area, and that's on the 2000 tick chart. If we look at the 1000 tick chart, we see similar things. It does not break the trend line yet. So that's the only thing that I'm having a problem with. It has not broken the trend line yet. I have a feeling that if it does break this trend line, though, it would be a great place for it to continue up. I could get in early, but I would regret it if I got in and it didn't break the trend line. Although, you know, there may be times when we can get in before the trend line's broken. But that's not necessarily part of my strategy for the month of March. I really want to see a trend line break. It's going to be a higher price. And that's the risk you take on these, is that when you have a trend line break, it's a little bit more confirmation, but it's also a worse price in that you're not buying it right off the tippity bottom, you know, but that's okay. That's okay. Let's see what we get here. 2000 tick chart, we need a trend line break. 1000 tick chart, we need a trend line break. Let's check the 250. 250 looks like it wants to go over the top of that thing. Yeah, it looks like it's trying to push out over the top of that now with the 2000 tick chart. It's making a higher low here. It hasn't closed above the trend line yet on the 1000 tick chart. 2000 tick chart, it hasn't even gone above the trend line yet. So sometimes when I don't know what to do, I'll combine the 2000 tick chart and the 1000 tick chart signs and signals. And I've had in my notes, I've had to put, make sure you follow the 2000 tick chart, because the 1000 tick chart sometimes can give you head fake, just like the 250. The lower down you go, the more head fakes you get. See this head fake here. If I wanted to get in early and if I was too eager to get a lower price, if I was antsy, if I was in a video game mentality, if I was gambling here, you know, yes, you can get lucky sometimes. You can get lucky and get it right sometimes. But if we're making a strategy and we have certain criteria and rules, we need to follow those rules, okay? So that looks like it's confirming on the 250 that it wants to go up. It closed. Okay, let's buy.
Order filled.
Okay, our stop is below, down here. Our target is up here. We should definitely try to get 1 to 1 on that, and hopefully it will go to 1 to 1. Now, if it doesn't work, that's fine, because I waited as long as I could, and I think that I waited for the right moment. And if it does not go up, then I'm okay with that, because I did the best I could on it, you know? I mean, you're not going to win every trade. You're not going to win every trade, and you just got to do the best you can. And keep your goals, and keep your target, and keep your criteria, and keep your questions, checklist questions, and keep everything in line. And hopefully, you know, you will be getting a higher probability on the trade, you know. So once it gets close to halfway, I will go to break even on it. And that way I can, you know, secure my risk at least, and hopefully it'll go to target 1. Another problem I want to succeed at, by the grace of God, is to let the trade play out. Even if the trade comes back and fails, you got to at least let the trade play out to target 1, at least to target 1. All right, there's taking, like right now, and I would get out because it's profitable. Even with a few ticks of green profitability, I would close a trade because of a lack of self-control, insecurities, and you know, it's almost time for the opening bell. Get ready to trade. Oh, it's the opening bell coming up. I forgot about that. Well, I would take this trade because the trade looks good. Maybe the opening bell will go in our favor. Maybe it will actually come to stop us out. That's always a bummer if that happens. It's possible to get out of the trade now because the opening bell is about to open with a small profit, but then if it goes in my favor, that's a bummer. It could have been pulling back. That's a possibility that I can just get out of the trade because of the opening bell and look for a trade again later. I'll tell you what, I'll put it on break even. If it stops me out at break even, I will get out because the opening bell is going to happen like in a couple of minutes, and I don't want to have it go against me here. I forgot about the time. That's why I'm putting it on break even. That's the only reason I'm going on break even right now. I'm going to move it up to target 2. I'm on break even. Sometimes the opening bell will get a nice rush, and that would be great. Yesterday I had several target 1s would have been hit if I was just. I'll give it a try today. See if we can get that up to target 2 here. Hold the trade at least to target 1. We'll see how things go and look. But I do have the target 2 up at the top. It's kind of going slow here, slower than I thought. Okay, target 1 was hit. I'm going to trail it a little bit here. Target 1 is definitely hit. If it stays above the moving averages, that'd be great. Okay, stay above the moving averages. It's almost time for the open. Stay above the moving averages. Last thing I'm going to do is close it out early. I'm already in profit territory above break even. I got my target 2 set. We entered a decent trade. The opening bell is just a little sketchy here, but what I need to do is get better at, what we need to do is get better at holding the trade and staying in the trade and not getting out, not getting jittery and not getting anxious and not getting nervous about what it's going to do. There's an old saying that I learned recently. What's it going to do? I don't know and I don't care. I've entered in an A+ trade. I've had multiple variable confluences agreeing that this is a good entrance. I'm already on break even. What's the bad thing that could happen? And knowing that even if it stops out now, I didn't lose anything. And the psychology and self-control of emotions is so important for us that it's a win even if it comes back and starts me out for break even. It's a win, all right? And if this turns out that it's only going to give me 1-to-1 reward today, then I'll probably just shoot for 1-to-1 reward, because that's what happened yesterday. I could have had 5 different trades that were 1-to-1 reward, and I only got 1 because I kept it on. I kept trying to get more, and it would only come back and break me even many times yesterday. So if this does that today, I won't be trying to get 2. I'll just go with 1, and that'll be it for today. If I get another good setup, that is.
Stop filled.
Okay, we stopped out for a little over break even, and I'm happy with that. So we would have been broke even. Let's see if we would have ended up with a loss on the trade. That's always interesting to keep watching. But any other trades I enter in today, I'm not going to shoot for 2-to-2. I'm just going to shoot for a 1. And we would have had that 1 risk, 1 reward hit at the top there, but price is not following through yet, at least not yet. Okay, so we'll wait for perfect trade setups to come if we get another one today, and then we're only going to shoot for 1-to-1 reward on it. Well, it's good to see that if I did not get out of that trade, I would have been at a loss, a full, complete, and total loss for the trade. My stop loss was down here. I got out for a few ticks above break even. It did hit target 1, and a lot of times the first trade tells you how the rest of the trades are going to be that day, and we will be looking, if it stays above. Now see, price is starting to drop below on the main chart that I watch, the 10,000 tick chart. If price drops below all the moving averages, then I'm not really looking for a long setup yet. Only when price comes up here, and you see how we could have hit 1-to-1 on that, and it was the only squeezed 1 trade that we could have gotten, but we would have gotten it. You know, if that's the only positive trade setup, because we waited for all the moving averages to line up like we wanted on all the time charts, exactly what our criteria is. Everything's got to be above the moving averages for a long. Everything's got on all my time charts over here. If that's the only positive, profitable trade that we get out of that, and we could have gotten a 1-to-1, then that proves to me even more that we have to follow our rules and criteria for the trade setups. All right? Because without that perfect setup, even though it didn't go very far. We're gambling and we're video gaming, all right? And so once 1-to-1 gets hit or gets close to it, once you get close to it, go to break even. We have a choice when it gets to 1-to-1, take it. If our strategy is above 50%, we'll be a profitable trader. This strategy seems to be above 50%. I have to go back and look for this month how we're doing on that. But the point is now price is below. So if price is below the moving averages, then I am not looking to go long. Yesterday we did a bunch of short trades. In fact, every trade we took yesterday was a short trade, not a long trade, because price was below the moving averages. All right, so we'll just wait and see how things develop, and we'll get back to the video. You see the 15-minute chart now. My goodness, that is below the moving averages. Okay, so yes, we would definitely be interested in going short in this situation. It doesn't matter if the day chart is bullish. It doesn't matter if the week chart is bullish. What matters to me is, the 15-minute chart and down for day trading. Okay, the 60-minute, I like to see price above the moving averages, and even that is falling below the 20 and the 50 EMAs. So it's definitely turning into a bearish situation instead of a bullish situation here. All right, as we notice our trend lines moving in the opposite direction, we're not trying to buy when these trend lines breaks to the upside, although you may get lucky and catch one that is the best. We're not lucky traders. We're not gamblers. We're not going to throw a dart and hope that it hits, and if it does, continue practicing bad habits. We're not going to do that. What we're going to do is follow the criteria and plan that we have. And that is when everything switches directions like this on our main time chart, which is the 15-minute and the 10,000 tick, we're going to be looking to go in the opposite direction. We're going to be looking to see if there's liquidity sweeps below that price wants to go get. And there's plenty of it down here. Plenty of liquidity sweeps down here. Okay? If price maintains this underneath the moving averages on all time charts, we need to be looking to go short. We need to be waiting for a bounce up and a trend line break to the downside. Okay? So that's what we're going to do. All right? Hopefully we'll get something to the downside if that's what it's going to do. Price has fallen below the high of previous day. That's right here. It is below with a strong wick on top. It's fallen below the previous day's high. That is bearish. You can see that same low over here. The high, the previous day's high. So if it tries to get back up over that, there's an old fair value gap that was support. It could be resistance now. In the same area, they tried to bounce on previous day's high, fell below previous day's high. Now it's trying to get back up into that area where we could see resistance. Just keep an eye on that. It's bouncing up into all the moving averages, trying to get back over the moving averages on the 5,000 tick chart and the previous day's high. Could this be resistance? Same thing on the 10,000 tick chart. Now we got it going up and down our key time chart, which means it's very choppy and it's hard to get a pinpoint. This is I don't really want to go long or short now because of the indecision of this thing. And you see the 200 moving average is flat. So that tells me that I need to be very careful. If I were to try to trend line break to the downside here now with price closing above the moving averages, it becomes higher risk. If this trend line break was taking place and the time charts were still below, like the 10,000 tick chart, if it was happening below the 200 moving average and below the moving averages, if this pull up was still underneath the moving averages, I'd be interested in taking a trend line break, but I'm not necessarily interested. It may be that it works perfect. It may be that it's fantastic a trade, but because of the strong move up, back up over the moving averages on my key time chart, I have to stay out of this trade. And I have to stay out of the trade long or short until I get a clear confidence that it's going to be on one side or the other. And until it's on one side or the other in a confident way, because it's trying to get back up over everything here on the 5,000 tick. It is up over everything on the the 2,000 tick chart. And let's check the 5 minute. Yeah, it's pushing back up over on the 5 minute chart, but it's, you see how flat it is. Okay, so that's really not a trustworthy area. Let's see the 15-minute chart here. Yeah, you can see all the choppiness that's been going on since the bell opened this morning, or since the morning news, technically, the CPI news. Okay, so we're going to wait. We're not going to rush into anything. Okay, what's transpired? We see another push. We see some push going above and continuing above the moving averages. I have noticed on the hour chart an interesting development here. You see these strong pintails off the 200. It's over the moving averages. The 20's crossed over the 50. That's a good bullish sign right there on the hourly chart. 15-minute chart, which is what I really like to use. It's looking like it's going back over. Do I trust that it's going to continue up? More and more as each passing second goes. But this is kind of what we want. We want it to pick a side, one side or the other. Make your mind up, okay? So when it does, and if it does, we're not looking to go short anymore. Although this would have, if it wasn't above the moving averages, this little short right here would have been on at least a 1-to-1 return on it. We're looking to go long, which means we're going to be looking for trend line breaks to the downside that go down like this. This also would have been at least a 1-to-1 return on it right here. So what we're doing is we're just going to shoot for 1-to-1 today because of the way the market's behaving, indecisive, up and down, kind of like what happened with my first trade here. And we're going to be looking for trend line breaks to the upside. So that means it's going to have to go down a little bit here and then reverse and go up. So we can't take a trade until we see a trend line being broken to the upside. So it's got to pull back now. And where will it pull back? That is the question. We're looking for areas for it to pull back. We just got a FEG on the 5-minute chart here from that move back up over the moving averages. This is a big wide one though, which doesn't always help when they're that big, and I don't want it to have to go back below the moving averages to fill it in, so I don't know how useful it's going to be here. Let's see if there's anything on the 1-minute chart. Well, let's see. There's a fair value gap right here on the 1-minute chart, but I don't know if that'll give us enough of a trend line break or not. There's one right here that was respected. That little bounce right off of that was actually, that probably would have been a good little area if I was paying attention to get a trend line break move, because it pulled back to a fair value gap right there, and it broke the trend line. So right here would have been a halfway decent little breakout. That would have been really, really good. So now we just have to wait patiently for something like this to develop again. Pull back to a fair value gap. See this fair value gap right here? Pull back to that, break the trend line, bounce off the moving averages. Everything's above the high of yesterday. Everything's above the moving averages on all time charts. Everything's giving us a check the box. And so we would have entered this trade had I seen it. Okay, so we're looking for something like that to develop. All right, is this a deep enough a pullback? Do I really want to take a chance on this? And I say
Order
yes.
filled.
I'm going to give it a shot right here. It's not a very deep pullback, and it could be bad. Everything's on the time chart, looks good. And I don't normally like to take these kinds of trades, but it is a trend line break, and the risk is very small here. And we got it down below this pivot. So we'll see. If it fails, it fails. If it doesn't, it doesn't. And, all my criteria is pretty much met. It didn't, the only thing it didn't do is, let's see here. I guess, yeah, it did kind of hit a fair value gap down here. So I don't know. I'm not too fond of shallow pullbacks. I like them a little deeper, but we'll see. And we'll see. If it fails, it fails. I'll learn from it. Hopefully it'll bounce off that trend line and off the moving average, bounce and keep going straight up. Getting in a trade and having it immediately go against you to the full stop loss is the worst. It's the worst trade that you can do. I don't know if I need it down further, if I would need my stop down further, but I'm not going to put my stop down further because the market is, and sometimes the only thing you get is a little tiny pullback like this. I've noticed on really strong momentum days that these are the kinds of trades you need to get in. Are we in a strong momentum day though? So I don't think this is a strong momentum day necessarily because of the choppiness. There are some days that are so strong in momentum, like this one right here. You can see this right here, that the only way you can get in the trendline break is to take a shallow trendline break off of the nearest moving average, and it doesn't really pull back. Here we don't necessarily have that kind of strong momentum day in play here, so a shallow pullback is riskier. Doesn't mean it's not going to work, it's just riskier. So we'll see what happens here. I don't like that I didn't, it's a riskier trade. I don't like that I'm taking a riskier trade. I like, okay, this helps. It's going up, and that's good. It does significantly increase the probability when you do have all the time charts agreeing. If everything's going in the same direction, there's a higher likelihood that it will continue in that direction. But that doesn't guarantee anything. It's almost to where I can break even on this. I'd like for it to hit target 1. That would be great. At least get me to where I can get to break even. A little higher would be awesome. It's a little over halfway there. I just don't want it to come back down. And there we go. I'm just going to put it on 1 tick above break even. Hopefully it'll keep going. I'm looking for that momentum to keep carrying it all the way through there. And we're going to let it hit target 1. If it hits target 1, by the grace of God, I'll be very happy about that. And we're only going to shoot for target 1 today because I don't know. I think that's what I need to do for a little while here. Letting it hit target 1, if it does, is a great step in the right direction for me, since I've always just sort of, took little tiny profits when they made it available. It's also teaching me to hold and be patient and let the trade play out, which is something I have to improve on. I am getting better, thank God. But so there's several things here. Number one, we're letting the trade play out to target 1. We're not getting out too early, antsy or anxious about, it turning green and then taking what little profits are there. Let it play out to at least target 1. Number 2, making sure we're taking A+ trades, meaning all time charts agree in the direction. Breaking even as fast as possible. And then just
Target filled.
Okay, target was filled. That is so awesome. I'm so grateful for that. Thank you, Lord. Now, it doesn't matter if it keeps going, because we are working on letting the trade play out to target 1 today because of the way the behavior was yesterday and today. I hope that I can get to the point where I can just trail my stop, which is maybe what I should have done today. Trail my stop a little, candle by candle by candle, possibly getting more by the grace of God. So anyway, the point is, I'm grateful that I'm getting better. Thank God I'm getting better, because I need to pay my bills, man. I need to get out of the job I'm at, and I need to do this professionally. Lord, definitely need to optimize my strategy when it comes to hitting target 1, waiting for target 2. Should it be so mechanical, or can I just eyeball it? And what if I did trail this thing, with the way I was thinking, trail it and just keep following it up little by little, just little by little by little. I'd probably still be in this trade right now. There's a candle, there's a candle, there's a candle. I'd be right here with that. I'd be right there. Yep, I would still be in this trade. Okay, I would have been stopped out right there. Fair enough. Let's take a look at this again. I want to see how that would have worked out for me. Okay, so we enter right here. Our stop loss is right here. It almost came back and stopped us out. I moved my stop from break even. I'm sorry, stop loss to break even when it got up there. As soon as it got to target 1, I should have went right under that last candle. Go under that last candle. Keep following it candle by candle. Now, I might have gotten stopped out on that little tip right there, come to think of it. If I was too close, candle by candle by candle by candle by candle, been stopped out right here on this one. But that's over 2-1. We're almost hitting 3-1 now. Somehow I've got to be able to get my mind wrapped around the idea of how I can maximize profits. There's days when just taking and even the days when it does go to 1-to-1, I could trail it a little bit, and don't have to let it lose all of it if it drops back down. If it drops back down to break even, I'm already above break even, so it's no loss on the trade. That's at least that I'm getting that out of the trades, thank God. But here's the thing about trying to get the maximum profitability is once it hits target 1, somehow figure out a method or strategy where I can move my stop loss, trail it, and right now it's almost to 3-to-1 over this trade down here. I think because I don't like these trades where they're shallow, I'm not used to them. I got to get past my failures in the past and just go with the new strategy that I'm using and the criteria and the rules and just stick with it. And even if it's a shallow pullback, they can really work. Obviously, this one got 3-to-1. Very excited about that. Very excited. But the big takeaway today is going to be something I need to really, really drill home in my brain, and that is how to manage my winning trades.
Oh yeah, JP.
Yesterday I had a similar problem where I tried to get more than the market was giving me, and I missed a lot of 1R returns today. And I've had happen in the past where I get out too early and it just runs and runs and runs. So
it was 100% scripted and
I have to figure out a method for me that will try to capitalize on the bigger moves, but yet take whatever the market's going to give me.
He said they would offer 3 and
So I have
5
to
day
work that out in
fasting.
my mind and in a strategy and then put it into
Interesting. Maybe they'll do a
practice.
5-day
I
pass,
like how I'm
80%
breaking
off or something
even
like
when
that.
it gets to target 1. I like that I'm at
screen is
least
too blurry?
willing to break even
Well,
before
then
it
you
comes
need
back
to
and hits me on a
change
loss
your,
like that first trade.
Must be
The
that
second
your-
trade here was
change
exact
your,
opposite. We
graphics
got out at
to
target 1
1440p.
and it kept going. And it's possible I might even still be in
I
this
stream
trade.
in 1440p, so you must be. You have to
So how
manually
could I
go in and
handle
change
this?
it
How am
to
I going to be able to
1440p.
develop a method or
It
process
should be clear
where
as
I'm
day.
protecting myself after target 1, possibly taking target 1, but still keeping some for the runner? That's an idea. I need to go with more than one micro contract at some point. The only solution that makes sense is to have at least 2
Oh my gosh,
contracts where
what
I
is
can
going
take target
on
1, keep
here?
1 on break even,
Okay.
and let it run and see what happens. That is the answer. So
What is
let me
going
write
on
that in
here?
my notes in my journal, and
Seriously,
so that way I can focus on it every day. All right, here we got another shallow pullback with a strong candle over the top, and it's everything's go on it. It's not. I guess the only problem is there's no other confluence, just a trendline break. Using the momentum. If I could find a fair value gap or a price structure or something that it's bouncing off of, I guess I'm just looking for reasons to not take it. 5-minute chart is showing us nothing really. 1-minute chart, let's see what we got here. It pulled back to... it penetrated that fair value gap there, so it's just a momentum play really, and it's a good reason to take the trade. Momentum plays are good plays, and it did break the trend line. All the time charts are going in the same direction. I just don't have any other, like I would have liked for it to pull back to this pivot here and bounced off of that and the 20 moving average. To me, that would have been even better of a setup, right? We didn't get a whole lot right here in this little consolidation breakout. That's why we took the trade earlier. I wish I was still in this trade. If I was still in this trade, I wouldn't have to worry about getting back in it. I probably would have stopped out up here, though, honestly. But, I can't not take the trade when it's looking good just because, what am I afraid? Am I following my rules? I don't have a secondary reason to take the trade other than all the time charts agree and it's broken a trend line. I guess we'll just take
Order
it.
filled.
We'll take it. I have to, stick to the plan. I'm going to use the trend line as my stop loss and the 20 EMA. It already penetrated down below that. I hope that it goes up. No one likes to lose. See, normally in the past, I would have been like, okay, once it peaks over the top of green a little bit, I would break even. And, I got to stop that. I wish my stop was below this pivot here, but I can't move my stop. It's already preset, and I'm not going to move my stop. But if it gets near target 1, I can safely break even, hopefully. And I'm trying to look for any other reason why we might have some problem. Looks like there's a target, liquidity target at the top here. It look on the hour chart. It looks like that's where it wants to go. It's just such a strong move up, and that's a good thing on one hand. On the other hand, there could be a pullback at any moment. But it's possible that we got our shakeout in the beginning of the day, and that's where the massive, volatility was at, and now we're just springing out of this sideways market and to go tackle that high, and that would be great if that's true. Let's see here. It's 11:13, so we're not in the lunch hour zone yet. So like I said, if it gets near 3/4 of the way up there, I'm going to move it to stop to break even. And again, I got to get my mind wrapped around the ideas that I entered a good trade. I got to let the trade play out. Even if it fails, this is a pretty good quality trade. Okay. If it comes down here and stops me out, I'm going to probably really slow down on entering into trades until I get more confluences and variables agreeing. I don't know how much more you can get to agree when all the time charts are saying, hey, this is a bullish move. Hey, this is a bullish move. Again, I think the problem is I really wish it would have pulled back to, I don't know, some kind of a unicorn, fair value gap. I'm trying to look on the other time charts to see what we got here. No, nothing on the 15-minute, nothing on the 5-minute, nothing on the 1-minute in terms of, well, we do have some fair value gaps now on the 1-minute chart. Let's take a look at this. We've got one here, and we got basically this whole area could be a fair value gap. So this whole area, it could, I just hope that this pivot holds up, and I hope that this trend line keeps going up. So we'll see what happens. I can't get out early, and I can't move my stop loss. So basically, I'm locked into this trade. So let's just see what happens. All right, hold it, let it get up there. Let it get up there. It's about halfway. I could go to break even now. I got to get past the anxiety and fear. There it goes. Now I can go to break even. Okay, so I'm just going to go to break even and see if it works itself out. If it comes back and stops me out, it went over halfway to the target. I don't want to close it early and start that habit again. Today and every day, my morning notes remind me that to practice good habits. Don't go backwards to what I've already changed from. And that goes with everything in life, but trading in particular, once you overcome a certain bad habit, you don't want to go back to that bad habit. And unless there's a really legitimate reason. If this was a lunch hour, we're getting ready to approach the lunch hour. We got 45 minutes before the lunch hour. If it was like 12:01 or 12:05, I probably wouldn't have took this trade. But if it was, slowing down because of the lunch hour, Things do slow down after 11 sometimes, but sometimes they just go right up until lunch. So I'm going to stay in this trade for a tick over break even. Hopefully it'll go right up to my target there, and we'll have another winner, hopefully. I think with this one, if it does go up to target one, what I should do is practice what I said, and that is try to trail my stop candle by candle maybe. Okay, if it goes up, it continues to go up, I think that I will do that. I'll try to trail my stop closer to the action rather than taking target one, because what if it keeps going up? I'm going to want to stay in the trade. Okay, it stopped me out for one tick above break even, so I'm out of that trade. And at this point, I don't know if it was a good thing or a bad thing to move my target up so close, my stop. And sometimes it'll break even and keep going right back up in the same direction. So that's another thing about breaking even too quickly. I don't want to break even too quickly. I mean, it did go over halfway to the target. So I guess maybe I should wait longer. Perhaps if it goes up 3/4 of the way. That's debatable. And such a strong move up all the way like this right here. I'm still thinking it is getting closer to lunch that this might be slowing down. So we'll see. Let's see how it turns out. This is trade 3. I got for break even, prices continuing to fall, but it's still above my stop loss at the moment. My curiosity is, well, will it stop me out? Would have stopped me out or not? And is there another way to get back in this at a better price? Because you see, I got in way up here on my third trade. I got in way up here after this big push. And is there a better entrance? That's the good question. Will I get that pull back to the pivot that I was looking for in the 10,000 tick chart? Will it come down into this area down here towards the 20 EMA, towards this pivot right here? Because if it does that and gives me a trend line break, that will be more interesting. However, it's we got a half an hour until the lunch hour, so let's see if we get something before the lunch hour. Another thing, it really, really, really matters how the trend lines are drawn. You can get sloppy with the trend lines and not see more precise trend lines. I didn't see this one up here that shot this all the way over here. That would have been a very interesting place to trend line breaks or retests. Retests of a trend line are really better opportunities to get a better price. So right here off of that trend line would have been a great price to try to get that. That would have been the best place to get it. I wouldn't have saw this trend line break retest had I not noticed on a lower time chart that there was these two pivots up here creating this kind of trend line right here going this way. I didn't notice that. So this is why we need to pay attention to multiple time charts and keep observing and paying attention to things. I'm curious to see now if this bounce off this trend line would have been a better trade. I'm thinking that already the price would have been better because we would have gotten in much lower than where I did. I'm tempted to take this trade. We got enough time before lunch, but the question is, are we going sideways? Because if we're going sideways on the 10,000 tick chart, that looks like what we're doing. Let's check the 15-minute chart. Yeah, 15-minute chart's been going sideways for an hour. I mean, this 15, it's just been chopping around right here. So I don't know what to do, to be honest with you. And like, if I can't find, a good feeling, a good, solid confidence, then I better stay out of the trade. I mean, yes, I like the fact that we saw the trend line and it's retesting and it looks like it could hold. But also, I think, there's still room for this to come down to this pivot level into this 20 moving average. I really do. I think that's what I would probably want to see before I entered a trade. But it looks like I would have been stopped out on that trade. I'm not sure if I would have been stopped out. Probably been stopped out on both these trades. Let's examine what we're looking at here. I probably could have broke even on that if I was real tight with my stop loss. Let me take a look at something here. I want to see if I got in right here and my stop was there. It would not hit 1-to-1. That would have been a very tough situation if I used that pivot as my stop loss. Now if I use my stop loss down here, I might still be in the trade had I gotten in up here. This is a completely different trade. Let me get rid of this one here. Had I gotten in right here because of the trend line bounce, but this drop down and penetration of this is just very ugly indeed. Let's go back to looking at what I was looking for. On the 5,000 tick chart, I would be interested in seeing a pullback that came to the pivots here and to the 20 moving average, something that came down into those levels and did a trend line, and then we could look for a trend line break, or even 50% of this move up here, which is the same area. So there you go. It's automatically built into the pivot level that I'm looking for. A deeper pullback could be down to the 50 EMA, which would be 50% of this whole entire line, this leg up, which would put us, closer down into where the 200 moving average is. But, that's what kind of day it's been. So yeah, I'm glad I broke even. I'm glad when I see stuff like this happen, because the first trade would have stopped me out for a full loss had I not broke even on that. So I'm actually glad to see that. On one hand, I don't like breaking even too soon. On the other hand, I like it when it works. So this is what we're having. We're having a sideways consolidation slowdown after that big move up. After a big move up like this, we can expect a pause, but I mean, if it's not going to continue up now at this point, as we approach the lunch hour, I don't see a way into this trade. It may work, but I'm not going to take the chance. I'm not going to take a trade on it right now. So I'm basically done for the day then, because I'm not going to trade in the afternoon, I don't think. So we will see you on the next video. Peace. Okay, this is my fourth trade today, and I'm not sure exactly how I'm going to work this out. So I probably should have thought it through a little bit more. I had a rough idea, but I have to practice having more than one micro contract, and I've only been trading one. So if price pulls back down here to my stop loss, what I'll do is I'll figure out a way to add to my position, because I need to have two anyway. So what I'm trying to do is watch. Remember I said let it pull back to this area, give us a trend line break. It did that, but I got in late. So here's the trend line break. Actually, that's right there is where it's breaking out. If I was getting in on the 5,000 tick chart, that I'm still in a really reasonable area to get in that trade. Let's look at the 2,000 tick chart and see what it looks like from peak to peak. Right, there you go. That looks pretty good. Stop loss, if I was to take this for one contract and keep it tight, my stop loss would be underneath the trend line, the two moving averages, and below that fair value gap that's been created. So technically, if I keep my stop down here, it should be okay down here. Probably can get away with having it right about here. Okay, because it would have to break the trend line, break the moving averages, all three of them, break the fair value gap, and come down here and push it. And that's a pretty steep fall. And if it's going to go down that far, it's probably going to keep going. So I just got to get my stop loss in place somewhere back up here. Now let's just let this roll out and see what happens. We waited patiently for the next move. It's after lunch now, and hopefully it'll continue in that path. Okay, it looks like trade 4 hit first target, and I'm just going to let it hit the target. I probably should trail it somehow, like I said in my last trade that I won. But this is the reason why I need multiple contracts, so I can follow with another contract. Let the first target get hit, follow with another contract, and hopefully that will resolve the problem.